The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you.
Good morning, everybody. My name's John Addis. I'm founder and editor of Intelligent Investor. And this morning I have with me here Graham Whitkin from sunny Canada. How are you doing, Graham?
Hey, John.
Graham's mum is making complaints about my monitor, apparently shaking when I talk. So hopefully Graham's mum will be... Actually, it did. I see what she's saying. It's me banging the table. Okay. I'll try and sit further back to appease Graham's mum. And also we have Nick here. How are you doing this morning, Nick?
Good, thanks, John. How are you?
I'm good, thank you. We have three topics this morning. One which is a timely kind of market-based conversation over the U.S. Tech Rally, which will lead us nicely into charismatic CEOs and the attractions and dangers of following them. And then we're going to have a discussion about the benefits of talking to management or otherwise. So let's kick off with the rally in US stocks, Nick. It's been pretty significant. For the first time, I think, in Intelligent Investors history, we timed the launch of something reasonably well. When we launched the Intelligent Investor Select Value Fund in March, we weren't expecting the kind of rally that we've seen since then. It's actually been going for about 6 months or so. How significant is this, do you think, Nick?
Well, it is pretty significant in the context of interest rates were up 5%. The S&P 500 was down 20% last year, and now we're in a new bull market. And most of the gains have gone to a handful of stocks. So up until the 30th of June this year, the S&P 500 was up 17%. But 70% of those gains have come from just 7 stocks that they've now named as they do the Magnificent Seven. And those are Nvidia, Tesla, Alphabet, Microsoft, Apple, Amazon, and Facebook. And so the rally has been extremely concentrated. So yeah, if you haven't owned these 7 stocks and you're a US fund manager, you've underperformed. And you're seeing a lot of reports. I've read a lot of reports, I should say, recently. And a lot of fund managers are underperforming because they were underweight these names. And they've now they're almost like our big 4 banks in terms of the concentration in the index. And it's only been going one way. The poster child's Nvidia, which is up 4-fold since October. It's now a $1.2 trillion company. And there's a few stats here that are just unbelievable. So it trades on around 200 times earnings. It's the most expensive stock within the S&P 500. And I went back and looked at its free cash flow history for the last 27 years, so all the way back to 1995. And it actually trades at 30 times the entire free cash flow it's ever made currently. Which is, and to put that in context, a company like Microsoft, which is also a $2.5 trillion valuation, trades on around 4 times the entire free cash flow it's ever made. So it's kind of unbelievable what we're seeing over there at the moment.
How much does this have to do with NVIDIA is obviously part of the artificial intelligence boom, which we've written about in the past. But what about the other stocks? Are they all deemed to be AI beneficiaries as well?
Well, I mean, yes and no. If you look at a company like Apple, which is trading at all-time highs, its earnings are going to go down this year, or predicted to go down. In the last quarter, their earnings did fall by around, I think, about 8% on an earnings per share level. It hasn't really been talked about whether it will be a beneficiary or potentially disrupted by artificial intelligence, but still enjoying the rally. A company like Microsoft obviously has been in the press around OpenAI and ChatGPT. And more recently, I think we talked about last time with their Copilot and Office 365. So they seem to be a beneficiary. And then I guess the jury's still out on Amazon and Alphabet. But Nvidia sticks out as the clear one because they're sort of the arms supplier. Well, their chips are powering all these companies, so they're the arms supplier to this war.
Mm-hmm. Graham, what are your thoughts? You're also in North America. Does this look kind of odd to you too?
Well, just hearing Nick then, it reminded me that we're in an interesting time because the larger stocks account for so much more of the index than they used to. The index, following the index doesn't mean as much. Like, what does it actually mean if the S&P is down a few percent or something, if all of that is coming from just the movement of a few stocks? So the first thing that jumped out to me is kind of the irrelevance these days of watching the indexes, because you're really just following a few stocks, what they're doing. You need to dig kind of much deeper to figure out what the general market or economy is doing.
That's right. I mean, if you have a portfolio that you benchmark against, the ASX 200, which is a typical benchmark that people use, or the accumulation index, and you don't actually account for the fact that banks and resources account for probably half of that, more than half probably, of that index. It's really kind of misleading, but I never expected to see the US, which is a broadly diversified economy, going the same way as the direction that we've been going over the last 20 or 30 years in a highly concentrated
It's interesting.
index.
They've kind of done a different route. We've got a very high concentration of specific industries, and they've got a high concentration of specific stocks, which are all kind of tech related, but they aren't necessarily going to move in the same trajectories. Like all iron ore will probably kind of move in sync, whereas Google and say Apple could be going in totally different directions over 20 years. So yeah, it is a more diversified economy, and I'd much rather own the S&P 500 than the ASX 200. But in terms of from a diversification standpoint, but
I think that's a good point. If you just look at our big four banks, they're really only Australian businesses. Even though these companies are listed in America, they're global businesses. They're over 50% of most of their earnings come offshore. So it's not just American companies either, unlike our big four banks.
Yeah. Nick, is there any evidence
to that? Sorry, go ahead, John.
Is there any evidence, Nick, that this boom in AI-related or technology stocks is over here in Australia as well? Can you see it spreading to other sectors in the US, or does it look to you as though it's just concentrated in these 7 or 8, in these magnificent 7?
I think so far the returns have been largely concentrated there, but we are seeing more and more companies talk about artificial intelligence. So a company we own in the Intelligent Investor Select Value Fund, Universal Music, they're seen as artificial intelligence is seen as a massive threat to that business, because you and I could possibly create a song with a few prompts of a keyboard, and how will that work on streaming services if we start uploading content and maybe their revenue share falls, or the user experience is hurt? So they're talking about it a lot in their earnings call, and I've seen a lot of companies in Australia, I would say more questionable business models, mentioning it more and more in presentations, similar to other booms, like when we saw cryptocurrency, some of these fintech players would start mentioning it and see if their stock price went up, and that. So it is spreading, but for now, I think the big returns has been seen mainly in these handful of stocks.
And we have downgraded a number of these stocks in the IISV portfolio too in recent months as well, haven't we? Okay, let's move on to the attractions and dangers of the charismatic CEO then, because it's kind of a nice segue. You mentioned the NVIDIA CEO. He's a genuinely interesting kind of character. What is it that you think attracts people to a kind of CEO who's been plugging away for 25 years, but he's got a very distinctive way of talking about his own business, shall we say?
Yeah.
He's very enthusiastic, and you can get carried away in it. What's your view on the CEO at NVIDIA as a way of beginning this conversation, Nick?
Well, I think he's the attraction element so far, and you never know how quickly that can turn into the danger element. I mean, this is a guy who rocks up to events where everyone's in a suit and he's just in his leather jacket. I don't think I've ever seen him without a leather jacket.
Malcolm Turnbull.
Yeah, yeah. He's got a massive car collection. He's an absolute car nut. I think there was a story that he had a crash many decades ago in his Supra, like just a very eclectic and energetic individual. He's also bet the company probably 2 or 3 times, and those bets, as you can look at the stock price recently, have paid off. So I guess that's probably the prime example of the attraction of charismatic CEO. People just get behind them and they really back their vision. But as I said, it can quickly turn into, I guess, a pitfall if something goes wrong.
And you get different CEOs for different times, where if he's been a fairly consistent character for 20 years, but he's only just taking the spotlight now, it could just be because the general kind of environment and the mood in the newspapers or whatever has suddenly synced up with how his kind of personality is, that maybe that same kind of character wouldn't work during a recession or wouldn't work during some other type of tech boom or something or other. That
I think that's a good point. You do need different CEOs for different kinds of circumstances and different market conditions. And you could look at, I would never call Bill Gates charismatic, but he had a drive and an insistence that got Microsoft started and developed it into this global behemoth. And then he was replaced by Steve Ballmer, and everybody's seen that developers video where he got this the most sweat I've ever seen on any man, even compared to sports stars. Absolutely astonishing thing to watch. And that wasn't the right kind of CEO for where Microsoft was at the time. And it took somebody like Satya Nadella, who's probably much more conservative, very calm, well balanced. He's got a soothing kind of voice, to come into that business and fundamentally reorientate it in a way that Steve Ballmer wasn't even able to see, let alone do. So you could see Steve Ballmer being there at the beginning of Microsoft and helping it get started. But once it went off the rails strategically, he was just completely the wrong person. And it was a kind of act of brilliance to pick Nadella out from the number of long timers that they had in Microsoft to be there at the right time. So I think this is one of the dangers that we fall into as investors, that the charismatic CEO appeals to our narrative bias. That it's kind of the great man of history story that we often all fall for, when businesses are kind of collective efforts and the tendency is to see it through one person's story. That's a very seductive thing for the human brain, but it's, from an investing point of view, it's a risk. And before we started the podcast, Graham, you mentioned Elizabeth Holmes as the CEO of, what was the name of the company again? I've completely Theranos. You can see the charisma in someone like that and her ability to raise money to get what essentially was a fraud off the ground. That played out very strongly in that situation.
Yeah, definitely. And that's the danger of these charismatic CEOs, is that charisma often follows overconfidence. And when you get CEOs that are just like blindingly confident, at least in their presentation skills, whether or not they believe in what they're actually selling, that can be very alluring. And I think she is a good example, because not many people would have seen it coming, because she just came off with all of those qualities that you love to see. She was kind of calm and intelligent, and I don't know what it was about her that gave her the charisma, but a lot of it was the confidence, I think. Yeah, and also the unusual story. You want to believe, this woman left school at 18, started this company, became a billionaire, and saved the world in the meantime. That narrative sucks you in, that people want to believe in these CEOs.
I think in terms of the warning signs, Elizabeth Holmes is spectacularly good. And I don't want to, it's unfortunate that we're talking about a woman here, because I think women get probably much more stick than men, and are more harshly treated when we're talking about this sort of thing. But she actively modeled herself on Steve Jobs. So she I've read the biography of her by the Wall Street journalist. I can't remember his name now, John Carreyrou. She modeled herself on Steve Jobs, so she deliberately started to slow down how she spoke. She lowered the tone of her voice. She would go everywhere in turtleneck jumpers. And without saying that she was modeling herself on Steve Jobs, everybody, like, your brain is just registering these similarities.
Mm-hmm.
So you think, well, this is going to be the next Apple. I think that's what your subconscious is doing. And of course, it didn't quite work out like that. But all the bells were ringing there. And I think this raises an interesting point about charismatic CEOs who are probably needed to get something off the ground. You need somebody who's got some charisma, can tell a story. The WeWork CEO is a great example of that. Adam Newman, a very imposing character, very charismatic speaker, can really rally the troops and rally the money even better. And that you do need that to get off the ground, but it's very hard. There's a very thin line between that and then going into a situation where you just have this belief, which isn't really reasoned. It's not grounded in any kind of facts.
Yeah.
Nick, do you have any personal experience of falling for charismatic CEO?
Maybe not falling for them, but one that springs to mind is definitely Hamish Douglas. As we all know, in the investment management industry, you can be a great investor, but you can still not raise any money. And he was probably one of the best I've ever seen at presenting and raising capital. He's very charismatic. Advisors just wanted to give him and allocate more capital to the Magellan group of funds. And I've sort of never seen another CIO like it, I guess. They always come across as very almost like accountant figures, very careful of what they say. And this guy do a couple of podcasts and 15 road shows, in a month.
Yeah.
All while, keeping up to date with everything. But just how quickly that can unfold, like it did with Magellan, as soon as, if he's the main person bringing in capital, it can soon go straight out the door. And that's what sort of happened. And I guess you've got to be careful with charismatic CEOs for a few reasons. One, you never want them in certain industries. Like, you don't want someone, even like Steve Jobs, making auto loans, like it's just the wrong character for the wrong industry. And then there's the last point is go back to Hamish Douglas, is just how quickly it can unravel when it does go wrong.
Yeah, that's right.
It also becomes a risk, I think, with those kind of CEOs that their natural charisma will put them in positions of power, and they can kind of accidentally trick the employees that they will always know better, whether or not they do. But then that means that kind of truth isn't spoken to power. So they're not going to get the feedback that they might have got early on, or that other companies' CEOs would get, because people start blindly believing, well, geez, Elon Musk must know better than I do about XYZ. And so therefore we'll just defer to his judgment. I think these charismatic CEOs, I mean, there are some brilliant ones out there, but they can break down the systems in a company that allow for, I don't know, a safer operation that, diversifies decision-making and thought processes and all of that.
That's right. I think the business is essentially a collective effort. A charismatic CEO is great for getting something off the ground, but especially in investment management, the idea that one person is responsible for every great decision is an alarming situation for a business to be in, I find. And Magellan is just a great example of that. But even if you're making widgets, if you're doing something like Apple is doing, the idea that one person is the font of all knowledge and is a dangerous thing. And I think there's a few points here that I'd like to mention that investors should think about when they're looking at these kinds of companies. And I do remember you remember the retractable syringe bubble? Somebody should do it. Somebody should do it.
What was that company called?
I forget the name of the company, but I remember going to the AGM.
Yeah, I was there with you, I think.
Yeah. And the CEO, it was just amazing how many times he used the word I. And I went through
see,
the transcript. Yeah, go on.
I was just going to say the phrase that I remember him making over and over was, "You can't make this stuff up." and I just remember thinking, nobody says that often and isn't making it up. But yeah, he used to love saying, "You can't make this stuff up."
So that the promotional CEO is going to say that kind of stuff. The egotistical, charismatic CEO is probably going to use the word "I" rather than "we" a lot more. So I went and did a count of the transcript, and I think he used the word "I" like 40 or 50 times. We also checked his Instagram. I think it was that one, but I would normally go and look on their Instagram and just see what car they drive. I remember when I first interviewed Greg Hoffman, we had an interview in the pub, obviously, and he was very, very keen to see what car I drove. And he was extremely reassured when he saw it was a Honda Civic, secondhand at that, I might add. And I think this CEO, the retractable syringe company, was driving a Bentley. And you can obviously look at pay, how much are they paying themselves? This is a company that really had no product or any money, but he was driving around in a Bentley. If they're, taking pictures of themselves on private jets, I think that's always a bit of a warning sign.
Yeah.
So
the one I love is when you read through, you can only really tell when the company's doing poorly, but they'll always blame environmental factors. I love seeing CEOs that say, "We made this decision wrong. We didn't judge XYZ. We did whatever," but they're kind of looking inwards. Whereas the ones that get in trouble, they're always saying, "Oh yeah, the market moved against us," as if it needed to move for them. That kind of thing.
Yeah.
You're seeing a lot of that in like commercial property and other sectors at the moment, saying, "Oh, interest rates went up. It's not our fault."
Yeah.
It's like, well,
yeah. I love you actually see it pop up all the time in our industry, where they'll say the format of the phrase will be, earnings missed guidance, as if the bullseye was the guidance, that like it wasn't us trying to forecast correctly, it was them who had to meet our forecast.
I think if you've got an egotistical CEO or an egotistical management, that is inevitably what's going to happen. That they will always blame external factors, won't take responsibility for them because their ego won't allow it. So charisma is one thing, ego, I think, is another. I mean, you might argue that ego is a subset of charisma, but some people are unegotistical, but do just to have a kind of natural charisma. But a charismatic CEO, which means, in, say, Hamish's case, he had great presentation skills, very smart person, but also an ego to match it. That's kind of a dangerous combination for a business, and I would try and steer clear of those people. But in general, I think investors should really ask the question whether you would rather be in a business with a charismatic CEO or somebody who is just calm, competent, and isn't really doing it for the attention that they get from it, or have this idea of them being the business being an extension of themselves. Because I think our narrative bias pushes us towards a charismatic CEO. But generally, the better businesses are run by people who have that sense of collective enterprise, and they don't build the business around them. They actively mitigate against that and make themselves replaceable and build a culture rather than a cult of personality.
Yeah, totally agree. Especially if the business is having to go through a turnaround. I think the last thing you want is for some white knight CEO to be appointed that everyone then thinks is going to save the company. I'd much rather see the company just quietly getting better quarter after quarter or whatever, without much news about it, without much CEO attention, where you just know that in the background things are getting done, rather than it's just being all for show.
So let's talk then about the benefits of meeting with and talking to managers, because often you see these things when you meet with management in a way that you don't when they're in the public domain. Graham, what are your views on on the benefits and traps of meeting with management in terms of informing your research and fleshing out your investment sort of hypothesis about a business?
Yeah, I'm not a big fan of meeting management, mainly because I'm aware of my own bias that when I meet someone, I tend to, well, especially if I have to meet them multiple times, then you're going to like them more and more in general, or you start, I don't know, hearing about their wife and kids or whatever, what car they drive. And there's suddenly a person behind the company rather than you just analyzing objectively the company in a very impartial way. Once you start interacting with the CEO more, it becomes not just a company, but it's like, oh, this person who has feelings, who is trying their best. And you can kind of become a bit more maybe forgiving, that as things are starting to deteriorate, you'll be like, oh, well, I'll just give them the benefit of the doubt, or I'm sure they're doing their best in the background or whatever. I think not having that relationship works better for me. And also, I'm a little bit wary of CEOs who do want to meet and chat with analysts or people in the investment community or shareholders, that I don't want a CEO to spend 60% of their time willing to talk, that they should be focused on the business and doing what's best in the background, not just trying to appease the shareholders and the investors. So I actually respect the CEOs who turn down phone calls. Maybe I just like rejection, but I like the ones who say, no, sorry, not enough time, or it takes 5 weeks to schedule something with them or whatever, because you know that they're doing their job. They're there trying to like work at the company instead of just chat all day to analysts. So yeah, there's something to be said for the CEOs who don't want to talk, who don't do presentations, who aren't there out in doing every interview possible. I find that they tend to be the better CEOs, really. I'm more wary of the ones who are just constantly on roadshows, who are just big marketing arms, basically.
Nick, what's your view?
Yeah, I think for me it depends, and it mainly depends on the size of the company. For large companies, there's a ton of information out there. You usually don't have access to the top management teams, and I think you can make a fairly informed investment decision without meeting with management. But as the market cap sort of gets smaller, there's just not as much information. So if you look at like an ASX company, maybe with a $300 or $400 million market cap, they might have 60 or 70 page annual report. And that's sort of all they release each year. They might release, they release a half yearly and maybe a presentation with it. And it's sometimes really hard to get an idea of what's going on in that industry and in that business. And I think that's where a call with management can really help, particularly if you have a specific question. You've got to be careful, obviously, as Graham was saying. You never want to be friends with a management team. That's just a quick way to financial ruin. You'll make some really stupid mistakes. And you'll also probably make excuses for them, as Graham say, oh, they're a good guy, and it'll all get better. But yeah, for specific questions and for smaller companies, I do find it sometimes beneficial with meeting with management, or even going on a site visit or something like that. With site visits, what's interesting is you actually get to see how they interact with staff, which I think is a really, particularly in certain industries, is a really good indicator in terms of the type of manager they are.
Yeah, I think if you're an AGM, seeing the CEO talk over the CFO, for example, it's a really, really good indicator of the kind of culture that they've got. We did have an example with Raymond. So I worked with Raymond on Supply Network, and there was something about that business that I just didn't really understand. I couldn't understand how their margins were so good when their network was so much smaller than competitors, and I felt as though we were missing something. So I suggested to Raymond he goes out and talk to management, see what he can find out, or just go and look at the operation, which he did a couple of days later. And it was quite revealing, because the CEO did get back to him quite quickly, that he said, oh, look, if you were looking for a part, I would have got back to you within about 45 minutes. So I thought that was kind of revealing. So the act of approaching management can be useful. I do remember a situation that Gaurav had last year where we were looking at Dubba, which was a very speculative, or still is, very speculative growth business. And there was something odd about the numbers that we wanted management to clarify. I won't say what it is, but there was something odd about them. And I think Gaurav got in touch with them 2 or 3 times. Investor relations people never got back to him. So there's something revealing about that. That could be because they're really busy and they're running the business and they're not interested, or it could be something else. In retrospect, given what's happened at that business, you go, okay, it was probably a bad thing. You don't know that at the time. But just the act of getting in touch can be useful, especially among those smaller businesses. I feel there are some things that you can learn. The bigger businesses, they're also media trained. They're also aware of they're not going to say anything to you privately, or they shouldn't, that they have not said publicly. I don't feel as though there's any benefit at all from talking to senior people in a very large business, unless it's something maybe about their background, how the business started, how they got involved, what their history was, that kind of thing. That might inform something useful about the business. But if you're talking about, the latest results or something, it's kind of pointless. When you listen to the earnings calls, you get that feeling, don't you? Like, I'm just amazed how banal the questions are and how banal the responses are too. It's very formulaic and very, very uninformed. But in smaller businesses, I feel as though it can be useful.
And I think for those really large businesses, the CEO is inevitably detached from the everyday operations because there's 20 managers between them and the guy coding or whatever. So they probably don't have a complete view of the business anyway. Certainly the board.
Yeah, that's right.
I'd rather speak to a middle manager at Microsoft or something and feel, how is the culture? What are the kind of issues they come up with? You're probably going to find some interesting stories there that you wouldn't get from a CEO who can only say what has been published, basically.
That's right. That's right. There was one CEO that we spoke with once where there was something. I mean, it was a long time ago. It was a Brambles CEO. I won't mention his name, but it's quite easy to work out. But there was a fuss. Brambles had lost a load of pallets, and the CEO got up at the AGM and said, "They're not lost. We just don't know where they are." So they're somewhere, but we just don't know where, which, is a semantic difference, but they're kind of lost within the Brambles network rather than lost in Antarctica or something. And afterwards, one of us approached him and said, "So where are the pallets then?" And he goes, "Well, they're effing lost, aren't they?" That. And that was a good example where you go, okay, so he's one of those people who is not willing to just say what's really going on and has a tendency to sort of gild the lily. It'd be much better to just come out and say, look, they're lost. And we hope to find them, but if we don't, it's going to cost us a fair bit of money. It's a much more honest way, but they weren't prepared to do that. So there is a kind of, you show that the PR and the party line is a very, very important thing in that business. Anyway.
I remember one, I can't quite remember what company it was, but I remember during the AGM, they were talking about their negative profits instead of just losses. Everything was a negative profit. And I was just like, where did you come up with these terms? Some marketing person must have told them to use it instead. It was more positive.
But I mean, if they're listening to that, that's an incredible worry. It's kind of worse that somebody's told them to do it and they haven't pushed back against it than come up with themselves.
The other red flag I find is just when you are listening to earnings calls, is the analysts that congratulate management on everything they do. It's just so intoxicating.
Well, why would they do that?
I don't know, because I think their job as an analyst is to have access to management. So the way you have access to management is just becoming, better and better friends with them, and I guess it's part of the job. But it's just so off-putting.
Yeah, you can members can rest assured that we have no interest in being friends with management and updating our spreadsheets every 3 months from the calls we have with them. Okay, well, I think we'll draw a line under that, but management behavior is something that is kind of a fascinating area of investing life. And often it's the little things that make the difference, I feel, that give you a little indication into how a company functions in its culture. So it's worth paying attention to. We'll just do, before we close off, let's just go around the group and talk about some research that you might have read, or an interesting story that you think might be of interest to our members. Graham, let's kick off with you. What have you seen that's piqued your interest lately?
This is going back a month, but there was an article published a little while ago called "Why AI Will Save the World" by Mark.
I read that. Andreessen.
Yeah, and that article has just stayed in my mind for the past month, because it's a lot of the media attention of AI at the moment has been on the negative impacts, how it's going to cause job losses, how it's going to turn everyone into Terminators or something or other. But this it kind of laid out the plan of how AI can benefit the world and really cause productivity to take off, why it won't lead to massive job losses. And it just pitched the positive side of the story. And maybe the reality is going to be somewhere between the two. But yeah, it was a nice reminder of when a new technology comes along, it can be scary, but it's not necessarily going to play out how you read in the media. There's other ways that things can go. So yeah, it was a nice article for those who want to see the other side of the story.
Yeah, that is an interesting article. He's definitely pushing his own boat in that. But I did listen to a few podcasts where he was interrogated on it. He's a very, very convincing speaker. And he makes a powerful argument. I'm not saying it's correct, but I think it's important to get both sides of the story, and the media inevitably takes the negative side. It's just more.
Yeah, that's why I liked it, is that it was just different to everything else you read.
That's right.
He was pitching his own. Yeah, I mean, he's got an incentive to believe that. But I think a lot of what he said seemed pretty accurate, particularly the job losses thing, where that had made me nervous that, if AI can do everything better than a human, then what ends up happening? But he laid out a very convincing argument for why it would just cause a shift in demand, and the jobs would follow that demand, basically.
Nick, how about you?
Yeah, mine's completely different. A podcast I listened to recently, it was on FC Bayern Munich, and I'm a football fanatic, and it's called Business Breakdowns, and it dives deep into the club's history and their financial background. And it's just fabulous. It's a real eye-opener into the world of European football and how different this member-owned club is compared to the big money you see in English football. So there's a fair bit of investment sort of background in it. But if you love football, I suggest checking it out.
Well, we all love football, and I'm really, really enjoying the Women's World Cup. I'm going to strongly recommend it. It's fantastic to see this tournament in Australia. One of the great things about this country is that you can have a tournament like that and there'll be supporters there from every single country. Like Colombia's just had amazing support wherever it's played. In Adelaide last night, when they were playing the Poms, China was playing the Poms. It was incredible presence of Chinese supporters. It's just been a brilliant, brilliant tournament. I'm definitely going to watch that Bayern Munich documentary, especially as it looks as though Harry Kane's going to be going there. I will recommend, as we were talking about Elizabeth Holmes, there is a documentary. I'm not sure who it's on, what channel it's on, but there is a documentary on a drama on the rise of Elizabeth Holmes and Theranos. And there are so many good lessons in that from an investment perspective around the issues of a charismatic CEO. And the downfall of a business that is built around not just a charismatic CEO, but her partner at the time as well, who was also equally charismatic and a bit of a bully and a narcissist. Well worth watching. I forget the name of it, but I think it's on either Disney or Peacock. But I will post a little note on the notes to the podcast, and there'll be a link in there if you want to watch it. Okay, well, thanks, Graham. I hope my desk hasn't wobbled too much. Get your mum to
Thank
give me
you,
a
John.
double check on that. And Nick, say hello to the filing cabinet for us.
Thanks
Thanks for being with us, and speak to you soon. Thanks a lot, everybody.